You're listening to session number 2 of Angel Insights, brought to you by SyndicateRoom, and I'm extremely excited to welcome Jos Dirkse to the show today. Jos is an extremely experienced entrepreneur and founder, having sold his startup before moving into the angel investing industry. And in today's interview, we delve into the power of investing in a group and how investment strategies really do develop over time. So without further ado, may I introduce Jos Dirkse. Jos, welcome to Angel Insights. Can you start off by giving us a little background about you and tell us how you made your entry into the investing world?
Yes, sure thing, Harry. Well, after university, I worked for several international IT companies and internet companies, and somewhere along the way, I started my own company with 2 former colleagues. And when after a year or two, when we started to earn some serious money, I decided to invest in startup instead of what the other guys did, which was buying a new BMW 5 Series. And then a year or so later, after we sold the company, and the ship came in, so to say, I really became a full-time angel. And actually, by that time, I already met a lot of business angels through an investor club.
And how would you say then your investing strategies changed from then when you started out to now? I mean, what was your strategy when you started out?
Well, the first thing that I did was talk to some more experienced guys and ask them what they had as strategy. And they said the only thing that you have to do is look to a person, to the entrepreneur itself. And that's what I did, to the entrepreneur and to the team, because you want to know if someone is really committed to go all the way and really can take the pain against setbacks, a little income, etc., etc. But and I guess that remained one of the most important factors, the entrepreneur or the team. And together with that, you have to have a connection with that person or the team, because as an angel, it's not only money that you bring, but you also bring your expertise and your business network, and therefore the entrepreneurial team must be open to your advice, so to say. And it's a thin line between sitting on an entrepreneur's chair or giving him advice, but together you have to work that out.
And do you ever feel like you want to be more involved, and how do you pull yourself back from actually being involved in a company when you are an investor still?
Well, my experience learned that if you are involved or if you're not involved, in the end, it doesn't matter to failure or success. The thing that you can do is just the little things. So I try to help the entrepreneur not to fall into the ravine, but I can let him fall off the pavement, so to say. So because everybody learns from mistakes, and one of the worst things that you can do as an investor is to want to take over or say, in my former company, we used to do this and that, and if I were you, then I should blah, blah, blah. That really never helps. And of course, as good entrepreneurs are, they're always pig-headed. So in the end, if they listen to you or not, it always depends. But it can be frustrating sometimes if you can see that he's running into a wall and you're saying, hey, don't do that, and they still keep running.
Absolutely.
Yeah.
And then other than the team, are there any other key metrics that you look at to validate the success of a company?
Well, yes. I said before, it's not only money. So I, as an angel, I must have added value to the business, and I must have something that I can add because as an angel, you're mostly in the pre-seed seed phase, and you're helping the company not only to grow but also to give a good root, so that they don't fall over when they are successful. But because even there's always a danger in becoming very successful too soon, too fast, because then you have other issues like funding and financing, and even if you are successful, you can still fall over.
And do you as an angel then assist in later rounds of funding? I mean, do you personally commit to maybe a Series A, or do you make the introductions to VCs?
Well, it all depends in the when you started and what you discussed about having an exit, because that's also a very important thing for an angel to see the exit and talk about it and agree upon what should be done when the success is there. And also it depends on the amount of money you invested in the first place. So if it's going well, then it's always easy to put more money in it. But it is also, being an angel, it's sometimes you are between a rock and a hard place, because you have fairly high risk because it's pre-seed or seed phase. But when a company becomes successful, and it becomes really successful, and you need for a third time finance, then the big players come in, and then they want you to leave.
And how do you react to that?
The first time that happened, I didn't react that well, because I
didn't want to be pushed out.
Yeah, because out of the 10 investments that you do, you have 3 to 5 companies that aren't there any longer. So all that money is gone, and then you got a couple of companies that they do okay, but it's hard to get your money out or to make a profit. And then there's one or two that really make up for it. And and if you have a successful company and the big guys come in, then you think, hey, I took the risk, and now we're there, and now you want me to leave. So, but if you really think about it, that's the way it is, and that's the position that we have as business angels. You are there to bring the company into adulthood, but being an adult is something else, and other things are needed then. And as an angel, you can't provide that because you can't finance anymore. Most of the time, the expertise that is needed isn't yours anyways to give. So it's a good time to step out.
And you said earlier about investing and asking your network. Do you like to invest with a network of co-investors, or do you like to do it individually?
Well, I did almost everything. So I invested alone. I invested alone with other people that I hadn't met before, but were brought together by the entrepreneur. So, which is not always a good thing, because you invest individually, but there are other investors as well. And they all have their own thoughts about strategy, needs and wants, and where to go, and what an exit should be like. And of course, when it's a failure, it doesn't matter. But when it's a success, you get all these talks about when and how and why. And that can also be very frustrating for the entrepreneur, and it can also be very damaging for the company itself. And of course, thirdly, I made some investments together with a group of people in a syndicate, and then you know everybody. And that's much easier, because you have, of course, talks about what you want as a group, and who the person is that's going to manage the investment, because because the entrepreneur doesn't want to talk to 5 or 6 or 10 people.
Sure, yeah.
And also a good thing about investing with a group is that being an angel, you're sometimes too small to do big acquisitions or investments, and sometimes most of the time you are also too big for the small investments. And there's a large gap between money needed for investment between a business angel and a VC or a private equity company. I would say that the average angel goes to probably 200, 300K as a max, and most of the time 100 or whatever. And a VC, private equity, they start they start from $1 million on. So, and there are a lot of companies that are worth investing in, and they need 500, 700, whatever. And then it's a good thing to go with a group of people that you know and trust, and to be able to make that step that you wouldn't be able to do alone.
And what do you look for then in the people that you do invest with? What characteristics do they have?
Well, what you hope for is that they have abilities and knowledge that you don't have. I always am a strong believer that you should surround yourself with people that know other things than you do. And if you have a group, then it's good that somebody, one or two, knows the sector very well, and you have people that can have a very good relationship with the team or with the entrepreneur. And it's always good to have some savvy finance guys in it as well. So yeah, it's an add up, and the outcome should be more than the numbers itself.
And when you look back at your investments, do you find that you're quite heavily weighted to one sector, maybe that you know more in, or are you quite a diverse portfolio?
Well, when I started investing in companies that had their solely point of sale on the internet. So they only had a web page and sold things through that. Because back then I strongly believed that was the way forward. But when I really dived in and with my strategy changed. So I've done a lot of things in investment, and B2B, B2C, and also social impact investment as well. So I would say that I started with a certain sector, but I changed that because for me as an investor, it's also good to diverse your portfolio and to see other things as well. And as long as you go along the way you go and you meet other people and you go with syndicates, then it's not only up to you and to your knowledge. So then you can broaden your horizon as well.
And talking about syndicates and your investment strategy, you've had a look at the SyndicateRoom website, and I was wondering which of the opportunities strikes you as most interesting. I'd really like to see this strategy of yours play out.
Yes, well, there are a couple of that are really interesting, obviously, and you can look into that on different levels. You can look into the team and how well suited they are for the things that they do and all the knowledge that they have. And some of the teams are really, really experienced, and they actually you can see that they really know what they're talking about, and they have won a lot of prizes these past years with investing or with challenges, etc. But you can also look into the amount needed and the equity offered, and then even if a company is pretty safe to invest in, then it might be not so, for me, not
so lucrative.
Exactly, because you have such a minor share, and I mean, it's always good to have a little from a lot, but sometimes if you have too little, then it's not really worth it, is it? So all in all, I changed a couple of times, if I wanted to invest in, but I guess, and that surprised me as well, because I don't have anything with the product per se, but I would choose a company called Sequester.
Absolutely.
And they are improving CCTV analysis to help solve crimes more efficiently and effectively. And what they do is, with all the CCTV data that they have some software that make the people that look at it easier to recognize what they are looking for. But if you think about that, then you could use that same technology in a lot of other different places as well. And the team is very committed and also very experienced. And if you look into the capital needed and the equity offered, that's also looks very, very good to me.
Well, fantastic. And I'd love to now dive into a quick fire round.
Yes.
So what's your best or favourite angel investing resource? Is there a book, podcast or blog that's particularly helped you?
Well, of course, besides your own podcast, I think the best resources are angels themselves. So, go out there and meet them. What I did when I started. And, during the years, I also trained a lot of virgin angels, so people that want to be in business angel, but they don't know the rules of the game. And when you train them, it's much better and easier to explain what the rules are. And there's no such thing better than a personal experience.
And then, what's the hardest aspect of angel investing for you?
I think that's the thing that we talked about before, is that sometimes you are too small for the big investments that you really want, and again, when it's a failure, it doesn't matter. But when you are successful, then the VC or the PE company wants you to step away and move out of the way. And that sometimes is the hardest part. It's not about all the failures and losing money, because you shouldn't invest money that you need in the first place. So.
And then finally, what's your most recent investment been, and why did you say yes?
I invested in a company called Advice Games, and it's a fintech company. They have an international market, and what they do is they have data-driven gamification on financial advice. So they have banks as customers that use their software to advise their customers better. And in the end, hopefully, everybody knows what they are buying or what they should do with their money, and how they're when they buy a house and stuff like that. So in the end, it also helps just the ordinary people in the street to be more savvy with the money.
Well, Jos, thank you so much for coming on the show. It's been fantastic chatting to you.
Same here, Harry. Thanks a lot.
And for all the resources mentioned in today's incredible interview with Jos, head on over to www.syndicateroom.com. And likewise, after every Angel Insights interview, there will be a Medium post based on a particular theme or topic addressed in that podcast episode. So you can head on over to Medium and search for Syndicate Room, where we have a special post just for Jos's interview. Thank you so much, and we look forward to seeing you in the next episode.